Here at MoneyWise, we're always saying that if you have cash savings, you really need to take advantage of a cash ISA. So if you don't know how to, here's what you need to know. Each year you can save £3,600, or if you're over 50, £5,100 into a cash ISA. From the 6th of April 2010, everyone can put up to £5,100 into their cash ISA. The biggest benefit is that they're tax efficient.
On ISAs you get income tax relief, so for basic rate taxpayers it's 20%, higher rate 40%, and next year the highest rate of tax will be 50%, so you could save up to 50% tax on interest earned in an ISA.
A few years back, interest rates hit 6%. Now they're only about half that, so it's all the more important to be careful with your ISA choices. If you've got a lump sum, then a fixed rate ISA that requires a one-off payment would suit you. But if you're looking at putting aside a smaller amount on a monthly basis, you'd be better off with a variable rate ISA. It's also easier to make withdrawals with a variable instant access rate ISA. But remember, once you've taken money out of your ISA allowance, this part of it can't be replaced.
You can only put in the maximum amount once, and if you take it out, that's your ISA allowance gone. So be careful about taking money out of an ISA. It shouldn't be the first port of call for cash assets.
You can switch ISAs to take advantage of better rates, but make sure you follow your provider's transfer procedure carefully. If you simply close an old account, you'll lose your tax break.
What tends to happen is you lose the best rates on old ISAs, so previous years' ISAs don't offer that great a rate. So ISAs that accept transfers, you can increase the earnings potential off that, the better interest rate.
When looking at the interest rate, don't forget that it might include bonus or tiered rates. It's fine to go for these, just don't get caught out by them.
If you know you need the money in a certain number of years, then buying a 5-year fixed rate ISA won't actually help you because you'll lose any benefit from the increased interest rate. Additionally, inflation and Bank of England base rates will have a big impact on how long you should decide for. At the moment, most people think about 2 to 3 years would be a good time, after which inflation and interest rates could start to rise quickly, which therefore the rates available now won't be very attractive in 3 years' time.
Don't be afraid to contact providers directly too and ask them any questions to make sure you've got an ISA that suits you.